U.S. President Trump is threatening to impose tariffs on Canadian fertilizer while announcing billions in new aid for U.S. farmers. Trump suggested he could target fertilizer imported from Canada to boost domestic production. Let's get more insight on this from Norman Levine, portfolio manager of Brook, Wagman Private Health Management at Raymond James. And Norman, thanks very much for joining us.
Thank you. Nice to meet you, Roger.
How real is this? How realistic is this move?
It's not realistic at all. The U.S. produces a tiny fraction of the fertilizer it needs for its farmers, and its reserves are very small. And as we know, in Saskatchewan right now, BHP is developing what's called the Jansen mine for potash, and it's taking many years, and it's going to cost them untold billions of dollars to get it done. So for Trump to say he's going to put tariffs on Canadian, he didn't specify Canadian, on fertilizer, especially potash, means that farmers in the U.S. are going to be suffering, and that means that prices for consumers for fruits and vegetables will be going up, and not going up a small amount. It's nonsense. It makes no sense.
Is this a political move as we get ready to renegotiate CUSMA or the USMCA or the MUSCA, MUSCA, whatever you want to call it?
We never know what he's doing and why. So yes, it's possible it is, but he won't be bargaining from a strong position on this. As I say, they need imports. They can't do without imports. And they can't do without a lot of imports. So to threaten this, I don't know, maybe he just got up on the wrong side of the bed yesterday, because it made no sense.
All right, and bigger picture, I guess, how are things to you looking? This is just one small part of it, but how are the markets looking around the world? Are we facing a 2026 that could be a little darker than some people want, or is it looking like there's optimism?
I am optimistic, and I'm pretty fully invested. And the reasons are that world economies are not going into recession. Their predictions were that the recession's coming. They're not. Employment numbers are better than expected. Corporate profits are much better than expected. And you're seeing interest rates starting to rise, excuse me, in the longer ends, the 10 years and 30 years, going out, steepening the yield curve. And that's a very positive sign for world economies, which tells me that stock markets have further to go. All stock markets are not equal, and all parts of stock markets are not equal. I believe that we're getting a rotation now out of the Mag 7, a lot of the high technology stocks, and broadening that out into more defensive a bit, with healthcare, with cyclical, with mining, with energy. And you're starting to see world markets outperform U.S. markets, and the small cap markets in the U.S., was something I want to talk about, are also starting to outperform.
And the world markets have actually, if I'm not, for the last year at least, they've outperformed, have they not, the American markets?
Yes, they have. And one of the ones I wanted to talk about today was the Israeli stock market, the Tel Aviv stock market, which since shortly after the October 7th, 2023 Hamas massacre, has more than doubled off of that. And it's because the Israeli economy is very resilient. Israel, as peace breaks out, and it is breaking out, and it'll be fits and starts and will take time, but the Israeli economy will be the major beneficiary of peace in the Middle East, and Israeli companies will, and it's not an expensive market. So both the stock market and the shekel, the currency, are going up. I've owned it since shortly after October 7th, still own it. It's in some of my portfolios the biggest holding, and happy to own it and still tell people to buy it here.
And is it being driven by defense sector, or what is fueling this?
Defense is part of it. The biggest parts of the stock market are banks and technology companies and drugs. Teva Pharmaceutical is the fourth largest holding in the Israeli ETF. So yes, Elbit and some other defense companies are in there, but they're actually right now not the leaders. It's the banks, the healthcare, and technology that are doing it.
I had a chance actually to watch the documentary on Technion, the university there, which they equate to MIT, and the tech sector and health sector that's tied in with it is pretty impressive in Israel.
What they come up with there is unbelievable. Most people who are watching you have no idea what parts of products they use, what drugs they take, what technology they use comes out of Israel. They would be, it's mind-boggling, and they don't know. So it's a very advanced economy there.
And when you're looking at Israel, are there certain stocks you like more or sectors you like more?
No, I don't want to pick stocks in a foreign stock market too often. Mm-hmm. So I buy the EIS, which is the Israel ETF. It trades on New York.
And what do you like about that?
Well, I like that it's a broad representation of the Israeli market, and the fee is low, and I just like the market itself there.
Okay, Norman, thank you very much for joining us today. We appreciate it.
Thank you, Roger. Nice to be on with you.
Norman Levine is portfolio manager at Brook, Wagman Private Wealth Management with Raymond James.